This video is based on the technical analysis of Amazon, and we're on the monthly chart as you guys can see. And on this particular chart, we can see that we have some very interesting price action. And if we look at this area over here, we can see that we had actually had a double top over here, or an M structure, which had a neckline more or less at this level, and we saw the market actually at this point break into the bottom side of this M structure, and then in the future coming back to the neckline to give it a test. And where we have that neckline is where we should have looked, or would have looked, for those potential selling opportunities, as the anticipation is for the market to move further down. And that is because, guys, as you know by now, whenever we have these M structures, we want to see price break into the bottom side of that neckline and then heading back to the neckline to give it a test. And generally speaking, where we have that neckline is where we look for those potential selling opportunities, right? Nonetheless, this M structure over here has played itself out. Why do I say so? That is because, in my very humble opinion, it started at this point, went up, gave us this M structure, right, and it ended at this point, right? So we can disregard that M structure. Nonetheless, the neckline of this M structure is now also a very strong level of resistance, as we've had multiple rejections in and around that area. And what this means is that in the future, we may potentially see the market head up all the way to the neckline to give it a test. And at this point over here is where we may again look for those potential selling opportunities, because, as I said, it's a very strong level of resistance at this point in time, right? What else do we see on the monthly chart that we should be looking at? On the monthly chart, we can also see that we had this overextended W structure over here, and it is an overextended W structure because that first leg is much lower than the second leg, and it has a neckline at that point, guys. And you guys know that whenever it comes to W structures, just like when we have M structures, we want to see price break into the upside of that neckline and then coming back to the neckline to create a test. And as you guys know, at the neckline is where we normally look for those potential buying opportunities, especially if that neckline aligns with any key numbers that we have on the Fibonacci retracement tool. In fact, let's utilize the Fibonacci retracement tool and see if we have any key numbers on the tool that align with the neckline of this W structure over here. So just bear with me, guys. And there we go. More or less, we can see that actually the neckline of this overextended W structure, which is over here, aligns, we could say, with the 61.8% Fibonacci retracement level. So what this tells us is that should the market from where it is actually move, or rather retrace back to around this area would be a good idea to be looking for those potential buying opportunities. Why do I say so? Number one, we have this overextended W structure. Number two, we have price closing above the neckline of that W structure. In the future, we would then have, if it does happen, price come back to the neckline to give it a test, and then we would also have the neckline or price align with the 61.8% Fibonacci retracement level. So this means that at this point we should indeed be looking for those potential buying opportunities. However, we're not just going to buy, we're going to look for potential buying opportunities, right? Having said that, if we do find any good buying opportunities or good entries at this point, I believe that our first take profit should be around this level. Why do I say that level? That is because, as I said earlier, this level is now also a very strong level of resistance at this point in time, as we've had multiple rejections in and around that area. Another thing that I also want to mention that is also very much interesting is that, as much as I'm saying that at this point we should potentially be looking for those buying opportunities and that our first take profit should be around this area, it's also possible that we may actually see the market move even further up to around these levels over here. Why do I say so? Number one, we actually have this candlestick over here, and what it is a bullish candlestick with a small body and quite a long upper wick, and where that wick ends at the top, we have a lot of liquidity there, and liquidity represents money that needs to be triggered by the market at one point or another. And we know by now that the market will always go to where the liquidity is, right? Another reason why I say that we may see the market actually move all the way to that level is because, remember, we had this M structure over here, and what normally happens in regards to M structures is that a lot of traders and investors usually sell on that second leg of that M structure, and they place their stop losses just above. So we have a lot of stop losses that are located in and around this area, and those stop losses represent liquidity that needs to be triggered by the market at one point or another. So it is quite likely that the market will head up to first this level and then possibly retrace and then possibly head up again to grab the liquidity at that point. So in my very humble opinion, I would say, should the market from where it is retrace further down to around this level is actually a good idea to be looking for those potential buying opportunities. And if we do indeed find any good entries at this point, our first take profit should be this level, and our second take profit should be this level over here, which is where we have the liquidity that I spoke about.